Hi, Shaz Nawaz here. Most entrepreneurs, business owners are very good at keeping an eye on their income on a regular basis. What they're not so good at is keeping an eye on their expenditure. Because if you started a business, the last thing you wanted to do was become a bookkeeper or an accountant. And therefore, from my own experience, a lot of business owners put off that particular role for the end of the month, end of the quarter, and sometimes at the end of the year, especially if they're not VAT registered. And I would strongly urge and recommend that you keep an eye on your income and your expenditure on a regular basis. Now, if you don't like doing it, then the best solution is, of course, to outsource it. So you can hire a bookkeeper to either work for you on a part-time or full-time basis, or you can outsource it to an accountant or a third-party bookkeeping firm who will keep an eye on your income and expenditure for you on a regular basis. Because quite often when I talk to business owners and I say, how much profit have you made this year? And the common answer, believe it or not, is I'll find out when my accountant has prepared my accounts. So let's run through that particular scenario, shall we? So let's say your year end is the 31st of December. You hand in your records to your accountant by, say, February, March the following year, so 3 months later. Your accountant then works on the accounts, and let's say it takes 2 or 3 months to prepare your accounts. So you have a meeting with your accountant in June to go through your accounts, which is 6 months after your year end. By the time the accounts are finalized, let's say it's July or August. So by the time you find out how much profit you've made, it could be 6, 7 or 8 months after the end of your accounting year. But having that information at that point in time isn't going to help you much, because those accounts have already become historic. So what I would strongly recommend is you either have a bookkeeper or outsource that job to a bookkeeper and keep an eye on your income and expenditure on a regular basis. And lots of people tend to keep their receipts somewhere safe where they can't find them. So nowadays, life has been made really easy for you and for me as an accountant. So if you have an online accounting system, like for example, QuickBooks, Xero, Free Agent, and there's quite a few other ones available out there, so you can obviously choose which one works best for you. But what you can do is take a photo of your receipt. It's up in the cloud and it's saved there for a very, very, very long time, and then you don't need to keep the original receipt. Then at the end of the week or at the end of the month, your bookkeeper can then obviously reconcile all the items for you, reconcile your bank, so you have a very good handle on your income and expenditure. And then you can go through obviously your monthly management accounts and look at where the expenditure is being spent. So if you're spending a lot of money on phone bills, you can then have a look at why is that happening. Is it because you're running, let's say, a telemarketing campaign? Is it like you're having lots of phone calls with your customers or clients or patients on a regular basis because you have got a proactive system of calling them up? Or is it something else, like perhaps your employees are making phone calls overseas and you don't have any clients overseas? Just an example, because I have come across that before for one of my clients. So it's important to track those numbers and see exactly where money is being spent. And the really good thing is you can then obviously at the end of the month track how much profit you've made. Yes, that's right. Profit is not a dirty word, and we're all in business to make profit. But what's really important is that you track those numbers. And I would say, if you don't have a business plan, have a business plan, and in there have a 12-month projection for how much income you would like to make every single year. And then break that down into monthly segments or quarterly segments, and then compare your actual performance to your budget and see where the differences are, because that's going to help you remain focused. So every single year, make sure you have a business plan, make sure you have a budget, and then on a monthly basis, make sure you have your management accounts so you can compare and contrast your income to your expenditure. And if the expenditure is higher than you expected, then have a look at why that's happening. Now, a big benefit, I would say, of having a budget is not to curb your expenses, to stop you spending money. The big benefit of having a budget is for you to be able to understand where best to allocate your resources to get the best return. So if you obviously are spending quite a bit of money on marketing, you can then look at which forms of marketing are working best for you and where you think you should be spending the most amount of money in your marketing efforts. That's just one particular example for you. But obviously you want to make sure that you are efficient and that you are profitable, and tracking your numbers on a regular basis will help you do that. And how I normally see it, and I hope you'll find this example quite useful, is that if you're driving a car, your accounts are what you see in your rear view mirror, because generally speaking those numbers are historic, they're in the past, so that they're no good to you to some extent. The only organizations or third party companies that they are good to is Companies House and HMRC, so that they know how much they can tax you. So your accounts are your rear view mirror. Your management accounts are what you see through the front mirror, your windscreen, because they are showing you what's happening right now, and your business plan is your sat nav, so that tells you where you are going. And if you're anything like me, nowadays I don't tend to drive anywhere if I'm going, especially if I'm driving out of my hometown, without using my sat nav, because I've soon established that the sat nav gets me there quicker, and if there's traffic on the way, it's going to find different routes to get me there in the shortest and usually the quickest way possible. So I hope that analogy helps you to understand how you can use your accounts in different ways. But make sure you keep all your receipts, make sure you keep an eye on your income and expenditure on a regular basis, and make sure you have a business plan and a 12-month budget so you can compare your actual performance to your projected performance. And obviously if there are variances or differences, or if you fall short in terms of your income target, then in the following month you can work a bit harder or smarter. Smarter is better usually than harder, and make up for the previous month. That way you're more likely to achieve the targets you wanted. And of course, if you're looking at your management accounts, let's say once a month, you're giving yourself 12 opportunities to succeed. Whereas if you're looking at your management accounts every quarter, you're giving yourself 4 opportunities to succeed. And if you're looking at your accounts once a year, there is no opportunity to succeed, because if you haven't done so well, by the time you look at those accounts, it's going to be too late, and then at the end of the year you'll probably be disappointed because you haven't made the profit that you expected. And that could be down to a number of different reasons. It could be your income, it could be your pricing, it could be your expenses, your direct overheads, it could be your expenditure for your office, for your marketing, or something else. So to have your finger on the pulse, so to speak, track your numbers on a regular basis, and then obviously have a conversation with your team members, with your accountant, so that you can set targets for the following month so that you achieve the results that you deserve by keeping your finger on the pulse. I hope you found that useful. Bye for now.